From London, I'm John Weeks, and this is The Standard. New research shows UK pensions are not doing well when it comes to their returns. Analysis from AJ Bell shows 9 in 10 pensions get worse returns than a FTSE All-Share tracker, a fund which mimics the performance of London's 600 company index. The majority of pensions have underperformed the index by well over 10%, with more than a third falling short by more than 20%. The research comes as questions are being asked about whether pension funds should invest more money in London-listed businesses and British growth firms. Last December, ONS figures showed that just 4.2% of listed UK shares are owned by pension and insurance funds, the lowest proportion on record. So, why are 91% of UK pension funds underperforming? And what could be the fix? Joining me now is financial journalist Michael Hunter. So, Michael, first of all, why are pension funds underperforming here in the UK?
Well, John, many pension funds in the UK have been moving away from straight investment in the UK stock market. And we've seen the FTSE 100, the main benchmark of the 100 most valuable companies in the UK, go on a bit of a record-breaking run recently, reaching all-time highs in the last couple of weeks. And with pension funds pulling back from investing in UK stocks, they're missing out on that part of the rally. And although their investments in other parts of the world have done pretty well, US stocks also on a tear, a rally in global bond markets further back from that, they're now missing out on this little bit of upside for the main City of London stock index.
And do we know why they have made that decision effectively to invest so little in UK businesses?
It's a very long story, and it goes back to some regulatory changes which came in the early days of New Labour and preceding, therefore, even the financial crisis, which were tightened up further after 2008 when the great wobble in asset values all the way around the world. And UK regulators since then, and at those two crucial times, encouraged UK pension funds to de-risk, in the industry jargon, or move towards safer assets, including government bonds, and that came directly at the expense of equities, or UK stocks. So there's some pretty eye-catching statistics around that, John. So the proportion of pension assets invested in UK assets in 1997 was around 53%. So around £50 per £100 in a UK pension fund was going into the UK stock market in 1997. And by 2021, those regulatory changes had cut that figure down to about 6%.
That's incredible. And I mean, in terms of going forwards then, what will convince these pension funds to reinvest or invest more in UK shares?
Well, John, that is the $100 billion question at the moment. And that sum of money that I just mentioned, the size of the value of that question, is the amount that some research done for the Evening Standard thinks is leaving the UK Stock Exchange for companies on it that are being taken private or are seeking bigger valuations on alternative venues, most especially New York. Now, in terms of what can be done, the question you asked, which has been reverberating around the city for years now, the devil is in the detail, and it's quite a difficult process to get to the bottom of the trigger that might actually work best for all that change that is needed and to reverse those kind of figures which I mentioned. Now, the Chancellor Jeremy Hunt is very keen to try and sort this out. He has introduced British ISAs, offering tax breaks for savers who earmark their money effectively to go straight into the UK stock market. There's been talk for a long period of time about restoring dividend tax relief so that pension funds generating an income from UK stocks can get a bit of a bonus from the government for doing exactly that. But the bottom line is pretty simple, and an intervention of some kind, a government policy overhaul of some kind from whoever's in Downing Street is needed to get these figures back up again. So just to repeat that, by 2021, only £6 in every £100 invested by UK asset managers running UK pension funds was going into UK stocks. It was £53 in 1997. So the government, whoever it may be after the next general election, has got some really heavy lifting to do to get those numbers up and to restore London's well-earned previous reputation for having a dynamic stock market, uniting capital with opportunity.
And obviously, a pension is something the majority of us rely on in the later years. Should we be worried about this current situation, Michael?
I think generally speaking, one thing that is pretty clear is that pension funds have weathered various storms, various worries, various runs of difficulties, and have always been able to meet their obligations. So if you are lucky enough to be paying into a decent pension fund and a decent job, I don't think you should worry too much. If you are drawing on your pension in order to keep yourself going, again, those funds are performing on that level pretty well. That de-risking that came in and has perhaps, in the prevailing opinion of the square mile, gone a little bit too far now, has nonetheless kept those payouts safe for pension holders and for people who are going to be drawing out on their pensions one day. So we're talking about a way in which a large amount of money in the UK, domiciled in the UK, can help the UK economy grow and can restore the reputation of its stock market. We're not sounding alarm bells on pensions being viable.
That was financial journalist Michael Hunter on why UK pensions are performing so badly. Let's take a quick break now. In part 2, we speak with film critic Joanne Titmarsh at the Cannes Film Festival, who's reviewed the new drama all about Donald Trump called The Apprentice.
It's definitely a very solid film. It's really brilliantly performed, but I wouldn't say it's worthy of an 8-minute ovation.
Joining me now is film critic Joanne Titmarsh, who's reviewed The Apprentice, a drama all about Donald Trump at the Cannes Film Festival. So, Joanne, first of all, can you set the scene for us? What part of Trump's life does The Apprentice look into?
So the film opens in the kind of early 70s when Trump is still basically a rent collector for his dad. And we see him going around from building to building and apartment to apartment, collecting rent from some very dubious characters that he's generally terrified of. And we see him as this very insecure and quite vulnerable person, desperate to get away from his dad's shackles and shadow, and a very overbearing shadow that it is. And we see really the beginnings of what Trump later becomes.
And according to The Hollywood Reporter, it received a nearly 8-minute standing ovation. What did you make of it from a sort of reviewer's perspective?
Well, I think we have to ignore the ovations at film festivals, to be honest with you. It's definitely a very solid film. It's really brilliantly performed. Sebastian Stan as Trump, I thought was excellent. He's got all of the kind of quirks and tics that Trump has, that we know the Trump of today has. So the obsession with his hair and his looks and so on. But I wouldn't say it's worthy of an 8-minute ovation. It's got some really beautiful visuals. I think that Abbasi works really well at creating 1970s New York, and then he makes a complete change with the 80s into the years of the Trump that we all started to know. You know, the Trump of Home Alone and Art of the Deal and so on. He focuses on certain aspects that we have read about. And here, obviously, I'm talking about the character Trump in the film. When I say that we see him as this rapist and narcissist and amphetamine addict and so on. But this is sort of very briefly kind of glossed over. And I think that Abbasi maybe just humanizes Trump to a great extent with this film. You know, his youth, his insecurities, his vulnerability, his awkwardness, and his desire to please his father, and so on. So I think it was almost as if Abbasi was torn between these two things, like showing this human aspect of Trump and where the Trump that we know today comes from, but not really going for the jugular when he could have.
And in terms of how it goes down in the US, do you think it will cause a bit of a stir?
I think that a lot of Trump supporters, that traditional stereotype supporter, probably won't even bother going to see it, to be honest. And the liberals won't change anyone's opinion of Trump watching this film, I don't think. It might surprise people. I didn't really know much about the relationship between Trump and Roy Cohn. And one thing it really, really highlights is how there is absolutely nothing about Trump, from his perma-tan to his tenets in the art of the deal to his Make America Great Again slogan. There is absolutely nothing original about this man. It was all taken from somewhere else. So that was interesting, for sure. And it's definitely a film worth seeing. It's really interesting. As I said, Stan's performance is incredible, but Jeremy Strong as Roy Cohn was also exceptional. Anyone who loves Succession will love this. You know, Murdoch also gets a shout out here as someone who's pivotal to Trump's success in the future. So it has got a lot, and it's got some great music. And I particularly liked the humor in it. And I really liked the relationship between Trump and Ivana, which was beautifully, beautifully done and very humorous. And it should be pointed out that a lot of the jokes come at Trump's expense. So, you know, there's that element if you're not a fan. But I would have liked to have seen something a little harsher.
There's more news, interviews and analysis in the Evening Standard newspaper and at standard.co.uk. Thanks for listening. We're back tomorrow afternoon at 4 o'clock.